Hello, this is Joe Pryor, the virtual real estate team in Oklahoma. And, I've been working with investors for 33 years. And market conditions are always changing. They're always different. And right now, it has very dramatically changed again, mainly because in the last 2 years, there's been a real run up in pricing on homes. And then second of all, as you know, interest rates have really accelerated very, very quickly as the Fed tries to tame inflation and also cut down, in fact, completely eliminate quantitative easing, which is them buying treasuries and mortgage-backed securities to keep things down in rates. And so what I do at a time like this is I'm going to explore other possibilities in investing versus a standard Fannie Mae loan. Is there a way that we can create wealth for you with a different type of financing that's non-conforming? So, for instance, one of the lenders who I respect sent me a program that sounded really, really good. It's a 40-year loan instead of 30-year loan. So you think, okay, already prices are going to be down. And in the first 10 years, it's interest only. You don't have to pay any principal whatsoever. Now, there's a lot of fees involved, and also there's higher interest rate, and there's 2 points that you got to pay, 2 points based on the mortgage amount. So here's what I did. I took an interest-only calculator, all right, and I put the numbers in for 40 years at that particular interest rate. And then I did a normal transaction at 20% down, and I used the 2 points to buy down the interest rate, which you can do. You can say, okay, instead of 6.25, I want 5.625. So I compared the numbers, and what I found out is in the alternative financing, you're saving $13. That's it, all right? That's all you're saving on the average on those first 10 years, even with interest only. Now, the other problem with it, which is why I'm not going to recommend it, is you've got 10 years of not reducing your principal balance. One of the things that happens is appreciation, of course, that really drives the price, but you're also paying down the mortgage. Now, the first year, obviously, it doesn't look very good. But as you start getting into 10 years, your equity position has very much increased. So that $13 savings makes absolutely no sense. And this is how I evaluate it. I say, this is the conservative way, the standard way, the traditional way. This is this alternative financing. Does it make any sense? At this point, it does not make any sense. Now, there's possibly some ARM loans, and that is adjustable rate mortgages that are fixed for a certain amount of time, like 3 years or 5 years or 7 years or 10 years. Again, at this moment, I haven't seen the savings. Haven't seen a really program that's come out that's really worth your time and worth your ability to take a leap here from having a standard 30-year Fannie Mae fixed rate. Promise you this, I will keep looking. If it's something that I think is in your best interest, if it helps build your wealth, if you're planning to sell within 10 years, which is another factor we'll talk about, it could be really, really worth your while. At this moment, a Fannie Mae loan, 20 or 25% down, which gives you an even better interest rate, and possibly even buying down the mortgage with a point or 2 points is what makes the most sense for what investors ought to be doing today.